Everybody, happy Monday. It's Jake here with the Dividend Growth Investing channel. Wanted to give everybody a quick update on the portfolio here, what I've been focusing on these last couple of days, and where I'm focusing primarily in my portfolio as it stands. If you're new to the channel, in this channel we talk about everything dividend growth investing. What I'm doing here is I'm sharing my journey to financial freedom through dividend growth investing here on YouTube. If you stumbled across this video and this is something that interests you, maybe you're a new investor, you're looking to grow passive income through dividend investing, or maybe you're more experienced dividend growth investor and you're looking to see what other people are doing out there, and maybe checking and seeing, okay, kind of benchmarking, is what this guy here on YouTube is doing, is that comparable to what I'm doing? Is this similar, or is this guy just talking random stuff? I'll let you be the judge of that. In this channel here, I am just all about sharing my experience. I believe I've never done this before. I've been investing for years. I've never really stuck with one strategy long term, apart from my 401k, my Roth IRA, in low cost index funds. And this here, I've mentioned it on previous videos, that this is really an experiment. I'm not here to say that this is going to work 100%. I have a theory that it will work, based off of, principles that I have put in place in terms of how I'm analyzing my stocks and ETFs that I have in my portfolio. I've shared other videos, which I'll link in the description here, on how I pick dividend growth stocks and dividend growth ETFs. So if you're interested in that, you can go ahead and check those out. They're all unbiased. It's just my personal opinion. I'm not affiliated with any company, any websites, nothing. This is just me sharing my journey on YouTube. I'm not a financial advisor. I'm probably likely just like you. I have a day job. I have a family. It's just the real deal, right? Okay. So what you can see here on your screen, this is M1 Finance. If you're unfamiliar with M1 Finance, it's a commission-free brokerage account similar to Robinhood, for example, or Acorns. You've maybe seen them here in the news lately, or on other YouTube videos. I've used Robinhood in the past. I've transferred pretty much my sole focus over to M1 Finance. Now, obviously, through my job, I have a 401k through my employer. I also have a Roth IRA that I have solely through Vanguard. So this is a taxable account that what I'm doing here on M1 Finance. I'm fully aware of that, the tax implication. I've talked about similar topics around taxes and how that pertains to dividend growth investors, but I'm not going to share that in this video. In this video, I really want to talk about a couple things. First off, I want to give everybody a quick update on where we're at compared to last week. I also want to dive into two stocks that I own in my portfolio, as well as just kind of talk about them with all of you, and just really hear your thoughts on what do you think about what I'm going to be sharing here, and I'll get to that here in just a moment. As well as you can tell by the title of the video, it's about creating Fyou money. Fyou money, and we're going to talk about that here towards the end of the video, so stick around if you're interested in that. But for now, what I want to talk about is first sharing an update on the portfolio. So here we're just shy of $18,000. In the last week here, we're down quite a bit, over $300. Now, the market has been going up and down these last couple of days, as you likely know if you're an active investor. And if you're not, well, now you do know. And so in the last week, we've got paid $1.97 in earned dividends. And now, if someone's new to the channel or new to investing, and they see this and they see a market gain or a market loss of negative 354, and they're like, well, you've only gotten $1.97. I mean, that's not the best return, right? As a dividend growth investor, I'm not concerned about the market gains. I'm not concerned about capital appreciation. What I'm concerned about, what I'm looking for, is earned dividends. I'm looking for a steady stream of income that I can then down the road in the future pay for my living expenses, pay for my livelihood. So, for example, my utility bill, my Netflix bill, my phone bill, all of those things, all those bills that I have coming in on a monthly basis, that's what I'm looking to pay. You can compare it to, say for example, if you yourself or somebody that has rental property that is getting a rent paid to them each month from a rental property. That's how I view this. As somebody that owns real estate or has owned real estate for years and years, they're not so concerned about the appreciation on the property itself. Yes, that's kind of icing on the cake. It makes you feel good, helps you sleep at night. But what you really care about is that sustainable monthly income coming from the rent. And I view that no different in my dividend portfolio here on M1 Finance. That's what I'm looking to do. And so when you look at this, I actually have a, counter, you could say it's counterintuitive, but no, I actually look at when the market is down, I get excited because I can buy stocks at a discount. The quote that I've always taken to heart from Warren Buffett: when others are greedy, you should be scared. And when other people are scared, you should be greedy. And that's how I view it as a dividend growth investor. And so that's my perception on it. Looking here in the last month, now the month of June is a massive month. I mean, the majority of companies, not all, but a large portion, especially in my portfolio, a large amount pay their dividends in June. And so here for the last month, we've gotten just shy of $40 in earned dividends. So all time, this graph is a little wacky because M1 Finance has been doing some updates on their site. For some reason, it's showing a different percentage and gain number here than what it actually is. This is actually, I believe, reflecting the amount of money that I've transferred into the account, not the actual gains. However, the earned dividends is correct. So in all time here, since I've had this account since May, it's $145. And that's what I'm focused on. This is what I'm looking at. And for those of you that are familiar with M1 Finance, they've been rolling this out where they've updated their activity section on the platform. And I'm so happy I actually have it as well. Finally, I know that they were updating that in waves. So here I can actually filter by for example, by trade, the dividends, if I've made transfers or withdrawals or sales, I can filter by that. And so that's what I'm looking at here. I'm looking at only dividends here, and you can see all the companies that have paid out a dividend. Now, some of these companies you'll likely recognize, with Coca-Cola, Union Pacific, Altria, and so forth. Okay, so this is what we got paid here in dividends. And what I wanted to do is I wanted to take a look at a few of the slices here. One slice that is, and once again the percentages here are incorrect. I sent over M1 Finance an email to get that fixed. So I'm not up 91%. It'd be nice, but I'm not up 91% in this slice. But one slice that I do want to look at is healthcare. Now, if you're looking for bargains out there, and I know I am, and I have been, there's two stocks in this slice that I'm really excited about. That being AbbVie and Johnson & Johnson. This is really where I'm seeing value in the market today. As you know, we've reached all-time highs in these last couple of weeks. The market is extremely overpriced. There are a few value picks out there, and I see these two companies as definite value picks today, all things considered. Okay, so the next thing that I want to dive into are some of the industrials that I have in this portfolio. I'm going to dive into two here, and we're going to take a look at them a little bit more in detail. I had to get a drink of water there, losing my voice. All right, so these are the companies that I have in my industrials slice. And, you know, as you can see here, you got UPS, 3M, Honeywell, Caterpillar, Lockheed Martin. A lot of these companies you're probably familiar with. These companies down here on the bottom I've just recently bought into simply because my pie allocation was a little bit overweighted, so I wasn't getting as many, you know, because M1 Finance, if you're unfamiliar, I have the auto invest function set on, so anytime I have over $10 in the account, it will then automatically invest in my underweighted, I can show you that here, underweighted pie or slices here, and so that's why the industrials, I've not been investing heavily in here, or M1 Finance has not been doing it, because they've been, for the most part, this has been overweight comparative to my other slices. But now it's finally starting to balance out with the other slices that I have here. Okay, going back here into the industrials, this is what I really wanted to focus on this video. Some of the companies that I've been buying: Deere, RSG, Boeing, AOS, and Southwest, and ITW, Illinois Toolworks. So these are the companies that I purchased this last week. And yeah, these are all the companies that I have in industrials. Quite a few. I think there's right around 20 of them with an average target allocation of 4 or 5%. So this is kind of how I have it set up. All right, so the companies that I want to talk about in this video, I want to talk about Waste Management and RSG. Now, Waste Management you probably have heard about. They're more of a, you know, at least where I live, more consumer facing, where they'll come by every single week and they'll gather your trash. But for those of you that are unfamiliar with RSG, they're also in the quote-unquote trash business, and I've been looking more and more into them, and I'm getting really excited about them. And so first off, let's take a look at Waste Management. When I look at waste management here on Seeking Alpha, you can see, okay, the dividend scorecard. And once again, I'm a huge fan of Seeking Alpha. A lot of information in here. So you can see here the starting yield is just under 2%. They have a payout ratio of under 50%. They've been growing their dividend for 16 years. Dividend growth, this is what I'm really interested in. As you can see here, they've been growing over the last 10 years, you know, a little over 5.5%. Now comparing that to Republic Services RSG, also very similar starting dividend yield, also very similar payout ratio. These companies are like identical. 9 years dividend growth for this, so a little bit shorter time than Waste Management. But this is the differentiator for me. They have over 7% dividend growth. Now we're not talking about, you know, a tremendous amount, but this is significant enough to catch my eye. So this is what I've been looking at and researching at least these last couple of days. So I'm really excited about investing more in RSG. Okay, the next thing that I wanted to go over, you know, you can take a look at the cash flow and the income statements, but I'm not going to do that on this video. What I wanted to look at was just, you know, the company profile. How do they stack rank? How do they compare with each other? With Waste Management, founded in '87, RSG founded in '96, not too far apart. 36,000 employees at RSG, and over 43,000 at Waste Management. Waste Management market capitalization of almost $50 billion. RSG market cap of $28 billion. So there is a difference in size. All right, so, and also another thing that I look at is the revenue growth. Revenue growth is a little bit shorter, a little bit lighter there compared to Waste Management, but they're still growing their dividend. But these are both two great companies that I think are, you know, definite options for dividend growth investors out there. I personally am going to be looking closer at them as time goes on, but I just wanted to share that here in this video, just kind of what I've been looking at here these last couple of days. The last thing that I wanted to talk about is that concept of creating FU money. Now, FU money, I think there's been some books written about it. There's definitely videos on YouTube about it. Well, what is FU money? I think if you're old enough to have experienced the financial crisis and perhaps you lost your job during the financial crisis, I think this will resonate with you. I think creating FU money is creating that, well, it doesn't matter whatever happens, whatever curveball life throws at you, it doesn't matter as long as you have that base and that foundation upon which you have your life set up. And whatever curveball life throws you, say, for example, you're in a stable job one year, the next year you lose your job. What is your financial situation? Are you going to lose your house? Are you going to have to move to go to another job? You're going to have to sell your assets? Like, what does that mean? And during the financial crisis, a lot of people lost their jobs, and those that had that FU money, that emergency fund, those savings built up, those, whatever it may be, that passive income, say, for example, from rental property or from dividends, they are impacted by the financial crisis, but it wasn't an individual depression for them. I think that's really interesting. When you're affected, when you lose your job, when you lose your house, it's an actual depression. When your neighbor loses their house, loses their job, it's a recession. Is kind of how I've always viewed that. So despite economic times, despite what happens in life to you, having FU money is really, really, really important. And that's why we do it. I mean, why do we save for retirement? Why do we go through the grind Monday through Friday in most cases, working that 9 to 5 or that 8 to 5 with an hour lunch every single day? Why do we do that? It's so that one day we don't have to do it. It's so that we can retire and live off of those savings that we've hopefully put aside for retirement. All right. So what I wanted to share is, for those of you that are familiar with the movie The Gambler, there's a famous scene in here from John Goodman and with Mark Wahlberg. And up before what I'm going to share here, this clip, and it is vulgar, so I do want to, mention that before I share the clip. It is a little bit vulgar. He definitely doesn't say FU money. He says something a little different. And in the scene here that I'm about to show, Mark Wahlberg is meeting with John Goodman. He's asking for some money. And John Goodman asks him, well, because Mark was gambling, he was up a lot of money. And then John asks him, well, how much were you up? And Mark Wahlberg says, yeah, I was up $2.5 million. And then what we're going to see here is John Goodman's reaction to Mark Wahlberg's losing $2.5 million. All right, let's take a look at it.
Any asshole in the world knows what to do. You get a house with a 25-year roof, an indestructible Jap economy shitbox. You put the rest into the system at 3 to 5% to pay your taxes, and that's your base. Get me? That's your fortress of fucking solitude. That puts you for the rest of your life at a level of fuck you.
All right. So it doesn't matter what happens, you have your base. And that's what I've been talking about. And I think that's what a lot of people, when we talk about financial freedom, that's what we're talking about. It doesn't matter what happens. I mean, it doesn't mean that you're driving, a new Porsche, a new Lamborghini. It doesn't mean you're living in Beverly Hills, right, drinking martinis every night. It means that whatever your definition of financial freedom is, that you can have that. And that's what I talk about on this channel. That's what we're talking about. For me, financial freedom means something completely different to, for example, my neighbor. It can mean something completely different to you. I think, just to share, for me, what financial freedom means, or having that FU money, it means whatever happens in my life economically, whether it be directly or indirectly, I don't have to lose sleep at night. I always know that I'm not going to have to I'm not going to have to cancel Netflix or cancel my internet or my phone bill or downgrade because of financial distress. That's what I'm talking about. That's what I talk about is having, FU money. It's not so that I can go buy a brand new car out of my price range. That's not what I'm talking about. So let's see what John Goodman here says about that when he continues.
Somebody wants you to do something? Fuck you. Boss pisses you off? Fuck you. Own your house. Have a couple bucks in the bank. Don't drink. That's all I have to say to anybody at any social level.
So, all right. Now, I know not everybody is going to own their house. Not everyone wants to own their house. But I think, the point is that you have that base, and it doesn't matter what curveball life throws at you, you're going to be okay. And that's how I view it. That's how I view FU money. It's not a matter of, some people look at that as getting ahead in life and taking advantage of others and, stepping on others to grow and get ahead. That's not how I view it. I think some other people also, have a little bit of a different view on owning a home. Some people say you should rent your home. I mean, the great Grant Cardone says, rent where you live. I think it really is a personal thing that you have to decide for yourself. Me personally, I want to own what I have. I want to own where I live, and I want to, no matter what happens, if there's a financial crisis, whatever it is, I don't want anyone coming to me and saying, okay, you owe me something. You're going to take, and I'm not talking about Dave Ramsey here where you're not supposed to have any debt. That's not what I'm talking about. What I'm talking about is controlling what you can control, and I think there is good debt. But that's not the purpose of this video. So everybody, that is my perception, my view on FU money. I'd be curious to hear what your thoughts are on it. Is this something that something that you view the same, or is it a little bit different? But everybody, thank you so much for tuning in. I really, really appreciate it. It really means the world. You watching my videos, subscribing, liking the video. It shows me that what I'm doing here is providing value, that it is helpful, it is interesting, and I love hearing from you all. So please let me know in the comment section below how what your thoughts are on creating FU money, and I will catch you all in the next portfolio update. Thanks, everybody. Have a good one. Bye-bye.